Good morning, traders. It is 8:13 a.m. Chicago time, 9:13 Eastern. I apologize for starting out late today. I got a flat tire coming in this morning, set me back about a half hour, maybe 40 minutes. So that's where I that's where I am starting this week. Anyway, here we are. Happy Monday. Some karma needed to work itself out this morning. I'm glad it's not in my trading account. It's the tire that got the brunt of it. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is mixed, slightly better on the slightly risk slightly allocating to risk. Crude oil is up again, trading at 51.05. The high for crude overnight was 51.43. 51.43, followed by the Euro FX and gold, and then behind that come the indices. The DAX is a laggard today, down 33 points, negative 0.26% this morning. Overall, not seeing too much to report as far as news is concerned. A lot of political stuff just throughout the weekend still, but nothing here that's market shaking at all. Um, the Iranian election was key this weekend, and of course the North Korean ballistic missile testing, and Kim Jong Un's order to mass produce these ballistic missiles now that testing has passed. It's just all kinds of a mess out there. Anyway, so that's where we stand news wise. As far as what we're looking for today, there's really nothing to report. We have two speakers this morning at 10 a.m. We have Fed Speaker Harker at 10:30. We have Fed Speaker Kashkari. For the week, since it's Monday, a quick rundown for the week. We're looking for tomorrow. We're looking for German GDP and IFO. We're looking for U.S. new home sales. Fed's Kashkari, Evans, and Harker tomorrow. Wednesday, German GFK, PMI and services PMI, Eurozone manufacturing PMI and services, US FHFA, services PMI, manufacturing PMI, and home sales. We also get the FOMC minutes on Wednesday. ECB's Draghi, Prate, Kaplan, and Kashkari. So Wednesday's two-liner. It took up two lines to describe what's happening that day versus just one. Thursday, UK GDP index of services, US advanced goods trades with and wholesale inventories, ECB's Constancio, and Friday is US core PCE, GDP, durable goods, University of Michigan, and Fed's Bullard. So we've got a Gaussian distribution. A Gaussian distribution of releases this coming week. The peak being right in the middle on Wednesday. That's a that's an inside joke for market profilers, uh, but that's how things are shaping up. To take a look at what we expected, I'm going to run through this real quick. What we expected on Friday. Friday, the market looked like it was opening around 2369. Was looking for the market to be responsive, to start to push down, to continue the move from the prior Wednesday. The saw a pretty good selling or an excess high right at the prior day's point of control right here. This looked like an excess high to me, so it looked like it would test up, and then the bigger moves will be down. That was absolutely wrong on Friday. Uh, Hypo 2 again in control. An open auction, a quick open auction, but the bigger move is up. That is actually an up arrow that was kind of messed up. And then the key target being 2378. 2378 being the key target, and then anything above there is gravy. Expected the market to close between around the 2373 area on Hypo 2. That didn't quite happen. We actually pushed way farther up. Um, than expected. But the idea behind the hypo is what's your bias? The bias for hypo 2 is up, and that's the one that was in play. It was obvious early on. Hypo 3 was looking for continued selling and was targeting 47.50. It was a pie in the sky kind of look at the market, but we're looking for two strong moves down as the market tests up and continues to push through. And to continue this move lower, we have a pullback and then the push. That's what I was looking for in Hypo 3. Hypo 3 was wrong, or did not play out. It's not that it's wrong. It is what it is, but it didn't play out. On the overnight, here's what actually happened. A quick open auction right there, and then we have this really big 9-point move. That is 3 sigma. That's a 3 sigma rotation in this time frame. Quickly pushes into that first target. Remember, the first target's at 78 right here. Pushes into the first target, and we just don't see it approaching the middle. The mid is right here. This blue line. VWAP is this line here. The teal line. We see the market remaining much higher than that. Very strong. And participation was from small lots as well as large lots marginally. And then as the market continued higher, we start to see the squeeze on the large lots here as they climb higher. The scale looks small because the small lots moved quite a ways before they retraced, but seeing that it's not flat shows us that large lots were participating on the buy side until this move down right here, when we saw large lots go from positive to negative and the small lots do the same. And so overall, what we accomplished on this day is we pushed into the MC point of control we left behind on the sell-off. So here it is. Remember this MC that started on April 25th and ended on May 16th on the day before the sell-off. That point of control is at 85 and a quarter. We pushed to 86 and a half initially, pulled back and pushed up to 88 before we sold off. So what the market has done is it has tested the point of control, the prior point of control from below, and has come off fairly strong on the close. So when we look at the close yesterday, pretty good rotation down. We had some pretty large moves on in this drop before the market balanced. The profile on Friday doesn't tell us very much. It tells us that it had some consensus up top and it had a bunch of consensus in the middle, but it looks like an anemic. It looks like a very deformed, not anemic, but deformed profile. Note also that we tested almost to the tick here. We tested the mid of the gap zone we left on that news day. We came within 3 ticks of that gap zone. The gap zone mid is at 88.75 before the market sold off, and we're pushing back into the gap. So now we're looking for 88.75 to be tested today. So not going to go into the weekly. I'm going to go right into the hypos. Time is up. So this morning, you notice these lines up above and below, these kind of fuchsia and orange lines. Fuchsia is a point of control that is naked. That's a point of control from here. It's naked. It continues to infinity here until it gets touched. And what we noticed from this is that there are a lot of those, a lot of areas that didn't completely trade or test. On the ensuing days, and so we have these areas that have a lot of gaps. We have areas that have so you pull in the gaps, and you can see there's just a lot of noise in this area. FOMC, the NFP release, all occurring in this area. This morning, I'm looking for an initial move that is an open auction. I'm looking for a responsive down into the point of control from yesterday. 82.75 is really important this morning, and I'm looking for it to push to 88.75 and then ultimately get back up into 91.75 and hold steady, probably finish in the 88.75 on Hypo 1. So Hypo 1 is what we're doing on Hypo 1 once the market opens is we're looking for that larger than normal move up, larger than normal move up, and then we start to implement or lean against support for the long. That is the goal of Hypo 1. Hypo 2, if we have an open auction, we test higher, and we have failure through the opening swing low, then I'm looking for the pullback to get short, and then the target becomes 79.75, and then we start to move towards the stem or the thin part, the single prints, which are at 76.50 and downwards from Friday. We have left on Friday an excess low or some single prints. Here's what they look like. Let me put that over here. So Friday open, and we left these single prints down here in a market profile sense, and that's what I'm talking about. So that's what I'm looking for as far as testing once the market fails to the upside. Okay, those are your two key hypos. This week is expected to be a pretty decent week for movement. There are no options expirations or anything. I want to remind you that next Monday is Memorial Day in the U.S., so things are likely to slow down dramatically into Friday this week. So just account for that. Expecting volatility to drop and reduce into the weekend. Our VIX last week reached 15.7 or so. It's back down to 12, and it's been hovering around 9.5, 10 for a long time. So we had a volatility spike, and the market has come off already and has filled in that space. So it's likely to grind upwards from here. Remember, every sell-off has been a discount that has been bought up in the ensuing sessions. Good luck today. Again, I apologize for being late. Good luck today, and I'll catch you tomorrow. Take care.